Okay, excellent. Welcome, everybody. The world starts here, according to my first slide. So welcome to that. It's nice to come and speak to you. Just quickly about where I'm from. I'm from Creative HQ, we're Wellington's business incubator. We help businesses to go and take on the world. So people come to us with ideas and with a starting point of a business, and we help them to grow it, and we help them to go out and meet the challenges that they face. We work with the region's brightest minds. And we've got quite a good track record. Please do go to our website, creativehq.co.nz. It's a really good website. There's some really interesting information about some of the companies that we currently have and quite a lot of our alumni companies as well. We've got a real range of businesses. Some of them are lab-proven science that wants to be commercialized and turned into something special. We've got some real tangible products, and we've got a bunch of really fascinating people. And I'm lucky enough to be one of the 5 strategists that helps those 25-odd companies to grow and face their challenges. And then me, I'm Dave Allisson, I'd say one of those strategists. So the reason I'm here tonight is my past. I was an accountant, trained as an accountant in Scotland, worked with PricewaterhouseCoopers there for 3 years, moved out here using my accountancy qualification as the way to get in. So I think they're trying to close those loopholes, but I made it through. And then spent the next sort of 7.5 years with PricewaterhouseCoopers here in Wellington. So my background there was I was working with privately owned businesses in an area of the business called private client services, and dealing with those privately owned businesses and the people who own them. So dealing with general business advice, financial structuring, financial reporting, tax matters, all that kind of stuff that doesn't sound too exciting but is really important. And then got a chance to do quite a lot of other business advice alongside that, just as need arose. During that time, I guess, some of the most valuable experience I got was outside of the office and in real businesses. So I would second out, hand my day job over to other people and go and work in real businesses for a while. So I've actually got some really fantastic experiences and really interesting stuff of working in real businesses. I've done the thing of ringing around on Monday to try and make sure that enough debtors pay that payroll can go out on Tuesday. And those are the really, really tough things, the situations you get into if you don't get smart about your finances. Now, you might be very smart about your finances and still get there. That's business. But you're playing the odds if you set things up a bit better and set things up a bit more sensibly. And today, I'm going to give you a few things to think about, a few ideas, a few risks to try and avoid, and just a few things that might put you in a situation where you don't have to do those hard call arounds just to try and make payroll. Cool. So that's the main message. Good financial practices decrease the risk associated with your business. Does that matter? My answer to that question is yes, kind of why I posed it. But it really matters. So the risk in the business is important to you guys. If you run a company to do your business in and you're a director, then you want to be operating, hi guys, you want to be operating soundly within the law. You want to be trading solvently. You don't want to be putting yourself at risk of the taxman coming. You're also reducing the risk associated with the business so that anyone who wants to come and invest in the business, or who you want to come and invest in your business, should hopefully view your business in a much better light because you've reduced the risk. You actually can talk to them knowledgeably about... there's a few seats down the front here, guys, if you can. If you can talk knowledgeably about your business, about the way it's performing, about what your balance sheet actually looks like, about how successful you are at collecting debtors and all those things, then you're a more compelling sale to an investor. And then you might think investment's quite far down the line, but 1, it might come along sooner than you think, and 2, there's a bunch of people might invest in your business, and that might be a co-founder, might be a team member you want to get on board, and they've got to take a value decision about your business. If your business looks risky, you won't necessarily get your team member on board. And yeah, any employees who might work at a discounted rate, that's really them investing additional amounts of their time, their effort in your business. So those are all investment decisions, and they might all be helped by you being able to be a little bit clearer about your finances. So aside from the whole paying your bills, paying your taxes element, all that other good business stuff is really supported by getting your finances right. What's the absolute bare bones minimum that you should be doing for your finances. Up there, I gnashed my teeth about this a little bit, but a cash book and a cash flow forecast are probably around the absolute minimum. So your cash book is basically, in its literal sense, it was once upon a time the paper ledger that you would work through, and every piece of cash in or cash out got a line. So nowadays you would normally convert that by downloading something from online banking and dropping it into Excel, or by typing it into a spreadsheet as you go. That would be the absolute bare minimum, recording every cash transaction in your business so you can stay on top of what's moving and prepare regular requirements like GST. Now, we'll come on to what else we might be doing, but that is absolute bare bones minimum. Stay on top of every transaction within a reasonable amount of time. Don't go back at the end of 2 months to try and code things 2 months old. Just set aside a small amount of time to do this on a drip feed. It's like all those good bits of advice about good health and so on. It's easy to ignore, and then you pay for it later. So I highly recommend stay on top of these things. That's going to be a message that I'll continue throughout. The cash flow forecast is just as important. Probably one of the most significant things any business can put together. You just need fairly simplistic cash flow forecast if you want. A starting balance. You work on what your absolute required outgoings are, and you look at that, and there's just a couple of bits of information you want from that. One, I would refer to as peak requirement. That means what's the biggest trough you go into spending money at your current rate. And the other one is burn rate. So how fast are you using your money? And from that, you can start to tell where the real pressure points are coming, and at what point you're going to need to go and drive more sales, go and tap on a friend's shoulder for a short-term loan, go and speak to your bank manager, speak to your rich aunt, whatever your source of cash is. But that cash flow forecast really should be built, and I recommend it to everybody. And if you've not used Excel before, or you've not built a cash flow forecast before, it can seem a little bit daunting, but again, some real basics and some common sense applied. Most people should be able to do something realistic and at least give yourselves a heads up of the biggest risks you've got. So there are actually a large number of templates available online. There's templates associated with, again, I'm not paid by Microsoft, I'll say Excel again, but a lot of templates on Excel which are entirely acceptable models. So use something that you're comfortable with. And then the only real message beyond that is to be realistic. So you're not fooling anybody except yourself. You must just try and make sure you're capturing every legitimate outgoing, and it's not just a competition to keep yourself flat, it's actually identifying risk in your business. That's what the cash flow forecast is for. So if you do that realistically, you're going to find those pressure points and be ready for them. You're not just going to find yourself short of money without any notice. When you're building it, just consider the phases of your business. And again, I go 6 to 12 months for an absolute basic starting point cash flow forecast. You don't have to go further than that up front. It's just a working tool, and it's going to change all the time. But think about the phases of your business. What are you actually doing, and what's going to change significantly? So you don't just rely on 1 month's actuals to drive all your expectations for every month, and start planning ahead for significant expenses. And just remember, when you're planning in sales, we'll talk about this again, but thinking about the actual cash cycle of when does your effort actually turn into cash in the bank. Really important that if your July sales are on invoice, don't expect to have the cash in July. You'll be chasing that cash 20th or after the 20th of August. So you want to make sure that your cash flow doesn't say it's there in July and you're not expecting it there in July, and you buy your wife's presents based on that money that's there in July, because it might not be there. I'm going to labour a few points tonight, but some of them are really important. So that kind of do this stuff up front, get something you're comfortable with, and the idea that you can do a lot more of this than you think, and the fact that these don't need to be big tasks. These are big tasks when the bank manager's asked for it for tomorrow, and you've suddenly got to deliver it in one night. If you're going to spend a little bit this weekend and then early next week getting this nailed down, it's an easy task. It's only difficult when you put yourself under pressure to do it. So, use some of the templates available and be realistic with yourself. The real minimum, the cash book, is a bit old school, and although I see people get by and do GST returns and so on based on those, the real minimum is using again, Excel. Maybe I should be sponsored by Microsoft. Using Excel or a similar product, they are available, or an established accounting system. I'm also not sponsored by Xero, but a really good, local success story that produces a really solid product. Their baseline, one, you get 6 months free. Their baseline product's then $29 a month. We could all do with spending less money every month, but this can save you money, time, effort. GST returns become quite simple. But again, I'm going to talk in a little bit about using accountants wisely, and they can really lead to Xero, coupled with a good accountant, can lead to you doing, being in control of much more of your finances, doing it live, and not getting surprises. Using that accounting system means you will get more out of your accountant. I think I've got another slide later about how you actually use the accountant, so I'll skip that. But the idea of all this is to be ready. And I mean being ready for opportunities. Depending on what your business is, certainly at Creative HQ, we suddenly find people who have an opportunity to work with a large player in the US. So they've got somebody who's got in touch, and the best thing you can do in business frequently is actually jump on a plane or a train or whatever and get in front of the people you want to deal with. And so often, our companies are caught short. They're just not able to make those journeys. So they do second best thing. If you want to be ready to actually take on challenges, you want to be ready when an investor asks for information. You want to be ready when the bank asks for information. In either of those situations, they're assessing risk in your business, and if you take a long time to return, to respond, or somebody asks for performance for 6 months, and it takes you 3 months to get that performance to them, you don't look too smart. So all of this allows you to be ready for challenges, be ready to take your business forward. So using an accountant. I work for PricewaterhouseCoopers, obviously one of the largest firms in the world, and those firms of that scale are there for a purpose. And I don't think I'd offend my former employer by saying I wouldn't recommend everybody in this room goes and and asks PricewaterhouseCoopers for help. As you're starting out, I recommend getting a recommendation from somebody else about an accountant that they've used and that they appreciate, and being aware of the risk areas that your business might be exposed to that should make you test or change that relationship. And I'll come on to some of those risk areas in a little bit. But yeah, get a recommendation for somebody and build a friendship with that accountant. There's an awful lot of business done over coffees in Wellington, an awful lot of advice given, an awful lot of support given, and for the cost of a flat white as opposed to an hour of billable time, you can get an awful lot out of that relationship. So, if not build a friendship, let's say build a good working relationship with your accountant. Accountants all need friends, and they'll appreciate some attention. I always did. But yeah, build that relationship and leverage it. And again, by not being, I guess I would always say, don't use your accountant for data processing. They're not word processing. That's not what they're best at. So you should be managing all the stuff that you can, and asking them to do the tricky stuff. Use them for their specialty. So by focusing on only asking them the questions you really need their help on, one, you're not scared off by fees for everything else, and two, you'll actually have a more meaningful relationship. By keeping them up to date on your business, they will handle the risks and identify risks for you all the more efficiently. So do build a relationship with your accountant. The do your own research there is making sure you're also on top of risks for your business. Don't divest responsibility for your business to your accountant. You need to, at least some degree, understand your tax return and the positions you're taking on that tax return. It is your responsibility. So do your own research. Try to find any areas where you might need help, and ask your accountant for that. Some pointers, again, right from the outset of things you should be aiming to do is separate your business and your personal expenses. It doesn't mean you need to have a separate credit card for the business and so on. You can run those things through personal. But again, just make sure you're sensibly recording them, dealing with them quickly, and you don't just have a big box of receipts to deal with at the end of, at every GST period or at the end of a year. Do yourselves a favour and just stay on top of it. Recognise assets and expenses as you go. So there's a variety of laws around it in terms of tax, but one simple guide that is a good starting point is if you're buying something that costs over $500, then it's an asset. Stuff under 500, you can just expense in 1 year. And the reason I say that's important is if you treat an asset as an expense during the year and trust your accountant to adjust it at year end, then throughout the year you're understating your profit for that year. So either one, you're understating your profit when you're talking to people about how well you're doing, or you're probably planning to pay less tax than you actually will have to. So making sure some of those things are in the right place to start with. But again, I would say make friends with your accountant, set out some rules about how you're going to approach things and get comfortable with that, and then get something you're going to run with for the whole year. And when it gets confusing, call them for a coffee and bend their ear. Something I see handled variously by business owners are things like mileage and home office and personal expenses. People have a tendency to push their luck on these items, I think, and try to get more and more out of their business. I just try and keep your noses as clean as possible and your lives as simple as possible by not trying to push heaps and heaps of things into the business. The reason I put mileage there is quite often people running businesses, your situation for instance, would be charging petrol costs to the business, and you don't charge petrol costs. You can apply a tax-approved mileage rate for each. They still call it mileage, even though it's kilometres, for each kilometre that you travel. There's a bunch of expenses you may be able to claim associated with your home, but don't assume you have a home office just because you work from home. There should be designated space and so on. So the reason I raise these is not that that's going to be an answer for each of you to take away tonight, but these are, again, sort of little risk areas to be aware of, that some people will encourage you to go down the path of just claim, but you're probably opening yourself up to risk again. And down the line, you want to attract investment, you want to attract other people. They're going to come and look at what you've been doing, and you want that to be clean and crisp. So yeah, really just focus on making sure your business expenses are truly business expenses. Okay. There's going to be some more cash management stuff in a bit, but we've got a couple more slides. One of them's going to scare you in a minute, just about things to be aware of. And again, these are just, I guess, observations of what I've seen in my career in New Zealand, and things that can go wrong. So this is the scary slide, I think. Yeah, there we go. So the inland revenue. I'm going to jump to that bottom point, because I guess the IRD have, in the past, got a bit of a bagging, and nobody really likes to pay tax, I suppose. But as an organisation, they're really quite well set up. And the phone lines, although it can be hard to get through, they're actually pretty switched on. You tend to get the right answers from them, as you'd hope. And there's quite a lot of online guides and stuff that do help clarify. And again, I don't saying that you should all go and just research the website and become tax gurus, because I don't think that's how it works. But giving yourself a little bit of background and information and understanding on given topics before you talk to your accountant about it, or after you've talked with an accountant about it, or you think, is this guy taking me for a ride? There's actually quite a lot of information online that's available. And some of it's well written, some of it's quite usable. There's a bunch of frustrations on the website, but a bunch of it's really good. So do use it. But absolutely, it's about knowing your responsibilities. So up there, these are the three main kinds of tax that you're likely to pay, even in an early stage business, or be responsible for. And the top one there is income tax. So you've got to be thinking about your personal income tax and the company's income tax. Even if you're not making profits yet, do take it seriously, because by filing your income tax return, even when you're making losses, that's your record of the loss that your company's entitled to use in future years against your profits when they come. right? So filling out, even if you don't think you're making money in your business, waiting till you're making profits to start filing tax returns is a bad move. Even when you're making losses, record them. They're yours, and you can use them later. Again, if it's against your personal name, if all your business is in your personal name, which again, probably wouldn't work for most of the ideas I'm aware of in Bright Ideas Challenge, but if that is the case, then you might well be using them in the year that you create them. But yeah, for your income tax, it's an annual return, multiple payments during the year potentially, but they're yeah, an annual return. And I would recommend that's something you do lean on your accountant for. So, you know, an annual service to, you know, good chance just to do one big visit. If you've been dealing with them during the year, they should be well aware of where you're at. Again, if you keep things structured, that doesn't have to be a huge cost. But getting that signed off by a real accountant, one, if you're with an accountant on their agency list, you get more time to file, which can be helpful. If you're with an accountant, then sometimes that will reduce your likelihood of being audited by the Inland Revenue as well. It's probably a pretty slim chance for any individual anyway, but your chance is reduced if you're with an established tax agent. GST, for most people, ends up being a 2-monthly exercise. As with income tax, if you're entitled to refunds, you should be thinking about managing your cash flow by filing as early as possible. So you don't have to wait to the due date to file. If you, again, so this is an advantage of being organised. If all your stuff's in order and you can just hit go on that the day after the end of the period, then you can submit and maybe get your refund before the due dates even come up. So that's good cash management. GST, you should always aim to pay all your taxes on time, but GST, it's quite common that companies get themselves into arrears on that and enter into payment agreements and so on. So that can be done. So you find yourself, because you might be paying over GST that you effectively collected sometime before, and you've accidentally spent that money. Don't hide. Do contact the IRD. These are the kind of things they deal with, and enter into a payment arrangement whereby you'll pay an amount month by month or week by week to recover that amount. And again, if you hide from the IRD when they find you, it's a problem. If you go to them and explain the issue and talk about it, payment plans are actually really, really common. It's just companies obviously don't talk about the fact that they're in them. I've seen, I don't know, probably 50 companies use payment plans for some type of tax in the course of the last 8 years in Wellington. Yeah, so it's a really, really common thing, but it comes from talking to them. Quite often they don't charge penalties. They might charge interest, but sometimes they waive that as well. If you talk to them first, it's good. Don't hide. And that really leads on to PAYE, which is the biggest one. So this is obviously tax you're deducting from an employee. We'll come on to this as one of the risk areas in a minute. But if you have employees and you're deducting PAYE, that's not quite the same as collecting GST or paying over your income tax. That's somebody else's tax that you have just held on to because you are collecting it on behalf of the IRD because that's your responsibility as an employer. That's not your tax. If you don't pay that over, you can get in a lot of trouble. And I had a client who did this, started a bank with the IRD. You don't bank with the IRD. You should have a bank. IRD is not your bank. They banked with the IRD, decided they were the... Yeah, go ahead.
In fact, if you look at the reports of companies that do go bust, just always PAYE will figure in there. That's the tipping point.
Because generally, your PAYE due date can end up being quite a long time after your pay date, and all that money's just sat around doing nothing. I could be spending that. So yeah, no, it's really common, and quite often when they go bust, it's the IRD takes them to court because it's a big chunk of money. This, if you think of average rates, I suppose it's something from 25 to 30% of the payroll of a company will be sat there in PAYE. So yeah, it's a really bad decision. The company I was referring to that had that suddenly had letters to all the directors of the company saying, we'll take you to court, we'll put you in jail, and the fine for this is X, $1 zillion. So it was really, really serious, and they ended up in a really serious payment plan. Yes, mate. When I said I've said holding twice, I think. Holding between the date that you pay your staff to the date that it's due, no interest. That's cool. It's on due date. If you haven't paid it, yes, interest at a high rate. So the IRD set their rate specifically to be higher than any overdraft rates because they don't want you to bank with them. Not only do you not bank with the IRD really know this and don't want you to bank with them. So they want to make it unpleasant to not pay them. So yes, interest plus penalties, and those penalties might be 100% of the tax. So yeah, just don't go there. Now, again, with early stage companies, not many of you necessarily have employees, but things ramp up. And one of the risks that we'll come on to on the next slide is about you might have an employee. So just be careful. But yeah, know your responsibilities around these tax. Again, there are really good guides. There's really good software add-ons for Xero, if you did get into Xero, that help you actually structure a lot of these things. There's a local company called FlexiTime that has online products for managing these kind of things. So there's a bunch of really great solutions that can make this easy. People make it very difficult for themselves, so highly recommend you stay on top of these. It's a massive impact on your cash flow if you muck up your taxes. It's really horrible. But yeah, the guides and the support you get from Inland Revenue can be really useful. Risk areas. So, just to be aware, risk area is me running over time. Yeah, I better rip on. So just to be aware of a few areas that can cause a bit of trouble. Contractors versus employees. If you take on a contractor and you sign them up on a 6-month contract and then they just hang around for 7 and they're kind of only working for you and not for anybody else, and you're kind of controlling their time, not them, and all those things, there's a bunch of rules there that can make them an employee, whether you have an employment contract or not. And as soon as they become an employee and you haven't given them an employment contract, you're then in breach of the Employment Act. So contractors and employees is something worth thinking about. It's actually worth getting a bit of advice. There's a few good employment lawyers around town who will keep you right. So if you're going to take on employees or contractors, it's something worth just actually having that contract looked at by a lawyer friend over a coffee, obviously. Overseas, not a very descriptive bullet point, but if you're heading overseas, if you're investing overseas, if you're getting money invested in from overseas, if you are selling overseas, these are times at which you revisit your relationship, right? So the person who, when you only had expenses and you weren't doing anything into your business, was the right person to do your accounts, to do all your tax work and all your support, might not be the person now. They might be, but do just test out your tax account. Ask them, have you dealt with this before? Have you actually dealt with any overseas taxes in Australia? So Australia has a bunch of stamp duties in different jurisdictions, and in the US there's sales taxes in different states. You just want to be aware of what you're doing. So think twice before signing that deal overseas. Just thinking about where you're actually doing business. If you sign a contract in another country, you may well have just started doing business in that country, and you may owe taxes in that country. So these are things, before you head overseas, make sure you have talked to your accountant, and not just anybody, someone who's been there and done this before. And they're there. People are out there. And again, intellectual property, anything that involves complicated structures, you should be talking to your accountants. So again, these are just risk areas to have in mind to know you should do something additional. You can do a whole lot early on yourself and be nice and safe and everything fine. Just be aware as things start to change, you're going to have to ramp up your approach to the business. Same with everything in your business. You're just going to have to think ahead, and as things are changing, make sure you've got the right team around you to support you to do it. Okay, into a little bit on cash management. So clearly, generally speaking, if you don't have any cash, you don't have a business anymore. So I'm just going to run through some cash sources. None of them are that easy, so it's not like there is a pile like that somewhere. Cash planning, just very briefly around what you might want to do with that cash flow forecast. Talk a little bit about debtor management, a little bit on pricing, which I know is a really challenging area, but I'll just give some pointers. I won't solve it for anybody, but happy to take some questions. And then a few other actions maybe along the way. So you have your own money, hopefully. The 3 Fs, who are friends, family, and fools, unless you're talking to one of the fools, in which case they are a first in. So these are your first investors in the business generally. So you you're out talking to your family members, all your friends, and anyone else who will write you a check. I'm so old-fashioned. They're not going to write you a check. You should be aware of the grants that are available. We've got a lot of early-stage companies in Creative HQ utilising things like TechNZ grants, which are now adjudicated by Ministry of Science and Innovation. Go through Grow Wellington, talk to them about what's available. Some, for developing websites and so on, you get some really serious support, and they'll 50% match up to certain levels the cost of your development. But there's a whole range of things there that you don't know about. Grow Wellington are completely switched on to these sources, so use them as a resource. And you'll no doubt hear about them elsewhere throughout the Bright Ideas programme. Banks, challenging, or can be challenging, although with the right deal, sometimes it's just if it's a cash flowing, something you've already got, it's particularly good. Hard to get seed funding from a bank, early stage funding from a bank doesn't tend to happen because they don't want to take that risk on. But if you're cash flowing a particular receipt from a large customer, or somebody actually was cash flowing the payment from TechNZ for one of those grants I just mentioned. So that payment was going to come in after the event, but they got the bank manager to cash flow it for a small interest rate. So the bank paid for it, and then they'll pay them back with the TechNZ grant. So there are some of those short-term bridging loans available, which might just save your bacon in the short term. So that's important to know. So again, make friends with your bank manager. So your new friends are your accountant, this lawyer friend, maybe an employment lawyer if that can help, and your bank manager. These have all got to be your friends now, if they aren't already. And again, it's really just cost of coffee and a little bit of interest. And these people are generally interested in your business. If they're not, find a new one. Angels and VC. So angel investment. I won't go into detail here, actually, because we don't have much time. There's one key source of money missing off my list. This is the interactive part, ladies and gentlemen. What is it? I'm putting it at the top. Sorry. Revenue. Good work. Customers. Really important as we get into cash management, because these are people you're really going to manage. Those are the people I was ringing around on that Monday to make payroll on the Tuesday. Customers, from time to time, will hold your money or hold the key to making their money your money. So do know your cash flow, that peak requirement and burn rate that I referred to earlier. Know when the problems are going to come. Keep up to date, stay on top of it, and keep talking. Keep talking to all of your friends who can help. Keep talking to your customers so that it's not the last minute that you're suddenly ringing asking for the money. Make sure they know when they owe you money in a polite way, and we'll just talk about that, I think, on the next slide. Just very conscious of my time here. Cool. Debtor management. I'm kind of mixing my metaphors here, but it's either you're fighting fires or you're taking the baseball bat to them. Either way, it doesn't sound very positive, but let's make it positive. Simplest thing in terms of debtor management. So we would talk again in terms of accounting or business talk. You talk about your cash cycle, and that's how long does it take you to turn effort on your part into money. And there's a bunch of things you can do to smarten up everything along the way. One of the smartest ones is get your invoice out. People aren't going to pay an invoice they don't have. So again, are you organized? Are you selling time? Run a timesheet. Are you selling widgets? Know exactly how many you've sold. So the minute you've got the right to invoice that person, by whatever contract you've got in place, that invoice goes out the door. And it goes to the right person. It's got the right address on it. It's really clear and easy for them to pay. The description of what you've done for them, make that generic so it's repeatable, but make it clear, make it unquestionable that they want to pay this invoice. Make it easy. So invoice promptly and clearly. Don't send invoices to people on the 5th of the month if they close off their accounting system on the 3rd, because they might just leave that for a month. So get a feel for what's happening. As soon as you get an excuse one month, even if you accept that excuse, don't give them the ability to use that excuse again. So if they closed off on the 3rd last month, then their invoice goes to them on the 1st or the 2nd the following month, so that the excuse is gone. Right? You just take that off the table. And again, that's one of those things that the postal service, or while it's sat in someone's desk or whatever, those are the worst times. Everything else is kind of manageable. You want to just cut this time down altogether. Email invoices is really, really common now. Just get them out, get them to the right person. Have a policy and a plan for following up on debtors. So once you've set your terms, do have a policy for following up. Now, you may want to do a little polite follow-up in advance. Big favourite is that you have a reason to get in touch with somebody shortly before the invoice is due. And you don't have to say, hey, my invoice is due, but you just have that little magazine article that you want to flick onto them, or you have the reason to get in touch, or the next bit of work's going on. Make sure you're in their mind and they know you're on the list, right? But have that plan. And the reason I put for everyone and an exclamation mark is that it's easy to let some of them slide, but it's all, by the time it's due, it's your cash. It just happens to be in somebody else's bank account. And you're not earning interest on it. It's not doing anything for you over there, so you want to get that back. So stick to that policy for everybody, and it doesn't have to be too aggressive. I like the idea of template emails. So your first one is, hey, the invoice hasn't been paid. Here's a copy. Don't wait to be asked for a copy. Just send one. It's just an email. It doesn't cost you anything. So, the invoice hasn't been paid yet. Here's a copy. Hope there's no issues, or let me know if there's any issues. Your second one can be, hey guys, we're really looking for this to be paid. It's now X days overdue. And then your third one, you kind of want to have a threat. In your third one, things come in three. So that third one feels like you should have a threat. So if you've got a service, you're going to turn that service off. If, if you use debt management, you can say you use debt management. So you might tell them that, our next stage is to send this to whatever. Now, if people are coming back to you and being friendly about it, then obviously you don't have to beat them up about it. But sometimes just those simple little steps, you're doing everything you can, you're doing everything you're meant to, but it's your money in their bank account, so get them to give it back to you.
Could you
Yeah?
charge them interest?
And you can set that in your terms. Again, what I want to be really conscious, I'm sounding reasonably harsh there, because I think it is important, and it's something that people don't feel confident being a little bit, aggressive is probably still around, but being just firm about it. So you certainly don't want to do anything that's so out of line for your industry that you scare off customers. You don't want to do anything too unusual. But again, the threat of it, I've worked at places where we had the interest charge available, and it was written on the bottom of the invoice. We never charged interest, but it always there as something to point to. So yeah, it's maybe just another threat to have that. We're a small business. Don't be afraid to play that card as well. We're a small business, and we're going to have to charge interest on this amount if you at the rate on the bottom of this fourth copy of the invoice I just sent you. If you want to pay all four of them, great. So have your threat and use it. But yeah, I think one of the biggest parts of cash management is that debtor management. Sorry, I thought there was another question there. Okay, jumping over to pricing. Main principle of pricing, I sound like quite a nasty person, but it's what can you get away with? So don't think for 1 second that Steve Jobs sat at Apple and asked somebody what all the bits of an iPhone cost, and then sat there and added them up on a calculator and went, all right, so this happens to be exactly a $499 product. He just went, that's worth $499, people will pay for it, let's put it out the door. People will pay more for our products than other products. That's what it's worth, and people paid it. So there's really three approaches to pricing, and you trying to balance them. One's cost, so you can just go on your cost and add something on. There's the market, and there's market-led pricing, which is what we're talking about there. And you might be taking decisions about your pricing in order to force your way into a market or to acquire customers or acquire use. But I'm a big believer that when you do that, you should make it clear that you're doing that. If you do give a discount, and I've heard a lot of people say full price or free if you're giving your own time, never discount, full price or free, so people know exactly the situation that they're in. Don't set a low expectation. But that doesn't always work for everybody. So when you discount, make it clear in the invoice that you're at the agreed discount, or discounted on this occasion for in the interest of our growing relationship. Oh, that doesn't sound too good, but in the in the interest of the early stage of the work with you, discount on this occasion by X amount. So make sure you're open about it, so people appreciate the value you are giving them. And again, the same ideas on the invoicing. Make it easy for people to pay you. So whatever your pricing model is, again, if you actually are a cash model, make sure you've got means for people to pay. If you're online, Amex is becoming less significant maybe, but things like PayPal are actually growing. So think seriously about getting the PayPal add-on, which is more cost to you when you're setting up. But if the norm for your market is to pay with those things, then have them available. It's quite difficult with everybody in the room probably having a different model, but one of the things that intrigued me recently was it was a SaaS model, so software as a service model, online product, and the talk was around the frequency of charging, how you charge, and they were quarterly in advance. So on the website, the cost was $29.99 a month, but they charged quarterly in advance. And the actual thinking behind that was that it comes up on the credit card and somebody goes, oh, right, yeah, that's come off again. I think I'll get rid of that, but I've got a quarter worth of it to use. So I'll do that sometime in 3 months, right? And of course, the statement goes down, and 3 months later, that's come up again. I really must get rid of that, but I'll just use 3 months more. So don't be too sneaky. People don't appreciate it really, but again, look at what's happening in the industry you're working in. What are people used to doing? And again, this idea of making it easy to pay, it's easy for people to do stuff they're comfortable with. So it might be that things being reflected at a weekly rate just makes sense to people. You don't have to charge them weekly, but again, make that decision easy for them. So even if it doesn't change your price, the way you present your price can have a massive impact on how comfortable people are in paying you. Can you flex in your pricing model? You've got to know if your sales staff can drop prices, if they're out physically selling, or if you can drop the price online. The other interesting one there is to start, even with an online model, start with a discounted level, advertise as a discounted level, and ramp it up. So again, 0. I can't remember what they started at. They're now $49 a month for the middle plan. They were $39 a month a while ago. I think they might have even been lower. But again, they've just ramped that model up. And if you got in early, good luck. Same model as the gyms used, Les Mills, I think. Same thing.
The only thing about what the Commerce Commission is to say about advertising a discount
no, that's a fair point. But if that's I think it's a fair point. If you haven't ever sold it, no, that's a good point. I would say the situation I'm thinking of had it. Yeah. No, that would be a lie, wouldn't it? Which wouldn't be good. No, it's a very fair point. Well made. Sorry, and the point for anyone who couldn't hear was that, if you don't advertise a discount to a price that you haven't sold at, you may well come cropper of the Commerce Commission. I'd intended to repeat questions for the video, which I haven't done. Okay, here are my takeaways with a wise old owl at the top to remind you how wise these ideas are. But already at the end of my time. You can do more by yourself than you think. There's actually quite a lot of support there. Some of the support you get through Grow Wellington. Come talk to Creative HQ. We like to help people. Support from all those friends you're going to make, bankers and lawyers and accountants. That all works. Do as much as you can as early as possible. So just get some things that work for you. Set out your stall early and stick to a means of recording your transactions and managing your business that works. Use your experts for what they do best. Don't use your accountant or your lawyer for data processing. Make lots of friends and then use their knowledge. No key risk areas. In that sentence kind of suggests I had all of them up there. I certainly don't, but know the areas where you might get into trouble. So think about employee relationships. There's actually something significant there. There's a lot of exposure for a business. So when you're taking on employees, take legal advice. Simple. If you're going overseas, get accounting advice. Simple. You don't bank with the Inland Revenue. I think I said that about 12 times. Go ahead.
What specifically mean by that?
If you've got an overdraft and you're scared of going into it to pay the IRD, go into overdraft, pay the IRD. So you don't leave them hanging and use that money for something else. So people sometimes just go, well, it's just the government. I'm just going to not pay that one. And the government's got lots of money, so I know nobody's going to go hungry this weekend. So it's all right, I'll just leave that. But they've got powers that other organizations simply don't have to make things really difficult for you. So when I say don't bank, so I have said it 12 times but never explained what I meant, so that's a really useful point. Yeah, they're not your bank. Don't use them as a bank. Yeah, so debtors have your money. Please get it back. And when you're pricing, use the market as a guide. You can do a bunch of market validation to help you do that. We can help you structure those kind of things. But yeah, make sure you're using the market as a guide.